In part 2, we will do the posting of the credit journals into the general ledger. Now remember that we've already posted the CRJ and the CPJ. Therefore, we are going to use the same accounts where we've recorded entries of the CRJ and the CPJ to record the entries of the credit journals. In the account receivable journal, we start by posting the total column into the account receivable in the general ledger. Already, there's an entry posted from the cash receipt journal on the credit side. On the debit side, we reflect the date as at the 31st of March. Under the details, we are posting total sales. These were the sales for the month. Recorded under folio ARJ, total amount as calculated in the journal. The output VAT column will be posted to the SARS account in the general ledger on the credit side. It will be posted as at 31st of March. Details, accounts receivable, posted from the ARJ, amount as calculated in the journal. The sales column will be posted into the sales account in the general ledger. On the credit side, date 31st of March, details, accounts receivable, posted from the ARJ, total amount as reflected in the journal. The cost of sales column will be posted to the cost of sales account in the general ledger. On the debit side, date 31st of March, details, trading inventory, posted from ARJ, amount as calculated in the journal. Immediately after recording in the cost of sales, we move straight into the contra account. We go to trading inventory account. On the credit side, at the date 31st of March, details, cost of sales, posted from ARJ, total amount as reflected in the journal. We are posting the returns from debtors which were recorded in the accounts receivable allowance journal. We take the accounts receivable column, we post it to the accounts receivable in the general ledger. On the credit side at the end of March, under details, we write total returns recorded in the ARAJ, amount as calculated in the journal. For the output VAT column, we go to SARS account on the debit side, the end of March, details, accounts receivable, recorded from the allowances journal ARAJ, total amount as reflected in the allowances journal. To record the debtors allowances column, we open up the debtors allowances account in the general ledger. On the debit side at the end of March 31st, 03, details, accounts receivable, folio, ARAJ, amount as calculated in the allowances journal. The last column is the cost of sales. We go to the cost of sales account in the ledger. On the credit side, we write 31st of March, details, trading inventory, folio, ARAJ, amount as calculated in the journal column. Trading inventory account. We go to the debit side at the end of the month, 31st of March. Contra account, cost of sales, recorded in ARAJ, total amount as calculated in the journal. we have moved into the accounts payable journal. Here again, we will start by posting the accounts payable column. In the general ledger, we go to the accounts payable. On the credit side, we reflect the date as at the 31st of March. Details, total purchases. These are purchases for the month. Recorded under folio APJ. Total amount as calculated in the journal. For the input VAT column, we go to SARS account in the ledger. On the debit side at the end of March, the details, it's accounts payable, folio, APJ, total amount as calculated in the journal. The inventory column will be posted on the debit side of the trading inventory account in the general ledger. Date 31st of March. Details, accounts payable. Journal APJ. Amount as calculated in the journal. In the sundry detail column, we will start with stationery. We take it to the stationery account in the ledger on the debit side. It's at the end of March. Details, accounts payable. Folio, APJ. Amount as calculated in the journal. The last item in the sundry detail column is the vehicle. They will be posted to the vehicle account in the general ledger. At the end of March on the debit side, details, accounts payable, folio, APJ, amount as reflected in the journal. We are posting the last journal dealing with the returns to suppliers, which were recorded in the accounts payable allowance journal. Starting with the accounts payable column, we post it to the accounts payable. On the debit side at the end of March, we reflect total returns under details, folio, a punch, amount as calculated in the journal. The input VAT column will be posted to the credit side of SARS account in the general ledger at the 31st of March. Details, accounts payable, posted from a punch, amount as shown in the journal. The inventory column will be posted to the inventory account in the general ledger at the end of March on the credit side. Details, accounts payable, recorded in a punch, amount as shown in the column. When posting is completed, the general ledger accounts should be properly balanced and closed off at the end of the month. To demonstrate the balancing and closing off of an account, let us look at the trading inventory as prepared from the example treated. As you can see, we have entries on the debit side of trading inventory that were posted from CPJ, ARAJ, and APJ. On the credit side, entries were posted from CRJ, ARJ, and APA. In our example, we were not given the opening balances. In most cases, opening balances are given for certain accounts. Let's assume that we were given opening inventory as 5,100. This entry will be shown on the debit side of trading inventory. Why? Because trading inventory is an asset. Therefore, for asset account, all opening balances will be reflected on the debit side of that account. This entry will be reflected as follows. Under the date column, we will show the 1st of March. Under details, balance. Under folio, BD, standing for a balance that has been brought down from the previous period. Under the amount column will be the amount that is given. In this case, we are given 5,100. Then, to balance off the trading inventory account, we will then have to determine the total for both sides and only balance off the account using the highest amount. In this case, the debit side is the highest total. Therefore, we take the total of the debit, we show it over to the credit side. Then on the credit side, we calculate the missing figure to balance the side. The missing figure will then be reflected at the end of the month as balance under folio CD, meaning a balance that will be carried down to the next period. The amount that has been calculated will be the opening balance for the new period, and this balance will be shown on the opposite side. In this case, the opposite side is the debit side. We will then show it at the beginning of the month as balance under folio brought down. The amount should be exactly the amount that was calculated on the credit side, and that amount was 15,702 rand 61 cents. This process of balancing and closing off will be done for all accounts classified as assets, owner's equity, and liabilities. Expenses and income accounts are closed off using a different process. In the next lecture, we will differentiate between real accounts and nominal account section. Work out this exercise, paying attention to the details in this exercise. Make sure that your total and subtotals of each journal do crosscast before you can move by posting into the general ledger.